All right. Good afternoon or evening almost, everyone. Welcome to Women Who Trade, a webinar dedicated to empowering women in their financial journey. I'll be your host today. Most of you actually already know me. I'm a premium client manager at IG Bank, and I am more than delighted to introduce two great women who you can already see, who are reshaping how we think about finance, mindset, and personal empowerment. So, first of all, of course, we're a bank. We're going to display our wonderful disclaimer. It's going to come here in a second. So while you're having a very quick read through, also quick note to our chat box for questions that you can use. It should be at the very bottom of your webinar tool. Please do submit them also during the webinar. We'll try to include them if it fits the topic that is being discussed. Otherwise, we take them at the end of the webinar or offline if it's really IG specific. So let's start with our key speakers. So I would like to introduce, first of all, Olga Miller on the very left side of the slide. She is a global innovation expert, specializing in women and finance, sustainability, and gender smart investing. She has been broadly recognized for her achievements with features in the global press such as CNBC, Financial Times, Bloomberg, you name it, all the big ones. And she also won numerous awards. So following her successful career at UBS, she has co-founded her own company called Smart Purse. It's a fintech venture revolutionizing financial education platform. And Olga's mission, I would say, is very clear: to close the gap between education and also helping women to build financial confidence and independence. That leads me also to our second speaker. You can see her in the middle and also on camera, Dr. Alexandra Balmer. She is the founder of Redefined Mind in Zurich. Alexandra has mastered the art of balancing two worlds as a top tier lawyer in financial markets and also as a certified rapid transformational therapist. So, in short, also RTT. Through her practice at Redefined Mind, she uses science-backed techniques in RTT and also hypnotherapy to help high-performing individuals with their mental transformation, to overcome topics such as self-doubt and stress, and challenges we all know, challenges that are particularly relevant for women who are wanting to enter the world of trading. So together with them both, we will explore how financial education and mindset transformation work hand in hand to create successful women traders. Of course, also male traders, because I think we have one or two online today as well. So let's begin with this empowering conversation. And I'm handing to you, Olga, for the start.
Okay, great. Thank you so much, Dunya. And hello, Alexandra. And hello, everybody who is joining us in this heated afternoon. Wonderful to have you all here. I also think, Dunya, people can send us some questions, right, over the chat. So, yeah, today we are here to inspire you to learn a little bit more about the basics of trading. Then we're going to hear from Alexandra about the Mindset Foundation. We're going to speak about the trading plan and how to build that, how to de facto frame your mindset for successful trading. We're going to speak about why or why not we would make a first trade today, and how to set yourself up for long-term success. And as said, this is supposed to be an interactive session, so please do send us your questions over the chat. And of course, the one thing that you definitely should not miss is Dunya's and my war stories from our daily trading practice, because all the theory that we're going to share with you, you can get probably also from recordings, but our stories you cannot get. And that should be your number one reason for sitting this webinar out to the very, very end. Cool. So with that in mind, let's start on the basics and basically cover a couple of aspects to be aware of when trading. First of all, maybe let's unpack, which you see on the next chart, what actually is really trading. It's de facto buying and selling financial instruments, whatever have you, stocks, currencies, commodities, or even whole indices, to profit from short-term movements. And at least for me, being a day trader, the aspect really is around the short term. So you speculate on price movements and you hope that actually you will make a good profit. And there is never a certainty, and therefore it is so important to realize that all what we do in trading is actually to trade probabilities. With the best of our analysis, with the best of our mindset, we hope that the market will move in the direction where we place our trade. Now, why would you do such a thing? Right? Why would you do this to yourself? Why do I do this to myself every day, 2 hours? I absolutely love the thrill about this, honestly. And I'm sure Alexandra can unpack a little bit more what all of this does. But it is definitely, how would I say, a very interesting affair. For one, because it's money involved. For two, because it's very interesting also analytically. And maybe, Dunya, you can give us the next chart. Because why do most people trade? Well, you have good potential for higher profits. You are in control like nobody else. It's your own decisions. Do the trade, exit the trade, stay in the trade. Nobody else will tell you than you. And I actually find that very beautiful because financial markets are always here. They offer us opportunities every day. Sometimes they offer us opportunities every hour, right? And all we need to do is to approach all of this with the right mind as well as skill set in order to profit, hopefully, from a nice gain. So with that in mind, I mentioned, right, you can trade very short term, so make a lot of small profits in many, many tiny trades, which would be called scalping. You can be like me and basically trade every day, try to take a piece of the movement, hopefully make a profit on the back of this and close all positions the very same day. Then there are people that are more in the camp of swing trading. So they maybe let the trade run 1, 2, 3 days, sometimes longer. And then there are people that are in it for the longer, which and practice positions trading and basically can do this with single stocks, commodities, whatever have you, but also, of course, if you let the position run for a couple of, let's say, weeks or months, you also could do it potentially with ETFs. Dunya, what do you practice most from all these trading?
Swing trading, I would say, because I am focusing mainly on futures, so more swing trading.
Yeah. And me, I trade by volume price analysis. So I'm in the camp of day trading. I never tried to do a swing trade, at least not with kind of my trading account, I have to say. So I either am in the positions trading with stocks or then in the day trading camp. Alexandra, you actually trade as well, or you coach people's mindsets to be better traders?
I do invest, but that's a long-term strategy and not a short-term strategy, simply because I don't have the time to sit down and actually monitor the markets, and I don't have a technique, but maybe I'll start.
Yeah, maybe you will get inspired the other way around from this webinar, right? And you know, we can teach you a lot of theory about chart analysis, about all the different techniques, about all the different indicators. But what I have really learned the hard way, I have to say, and probably speaking for Dunya as well, is that the mindset is one of the most important aspects in being a successful trader. And so today, we are really very lucky to have you here, Alexandra, with us. Maybe share with us a couple of words around the Mindset Foundation that actually will set everybody up for success.
Absolutely, happily. Thank you, Olga. So your mindset is the foundation of everything that you do in your day-to-day life. Whether that is trading, investing, or simply going through your day-to-day life, you are being constantly impacted by the mindset you have. You can see yourself as wearing almost like an astronaut's helmet that sits on your head, and that completely distorts the reality as you see it, because everything you see, hear, and feel is completely transpired by all the experiences you've had before in your life. The first 7 years of our life are essentially you in a hypnotic state, which is why children learn as fast as they do. Children have the uncanny ability, they watch you do something, they copy you instantly, and they just take over. And that is because they don't have this filter, they don't have the questioning, they don't have the, why am I doing this? They simply see you doing it, and they copy and they follow on. If you've ever stubbed your toe in front of a child and then cursed, you will notice that the child instantly is repeating that word. And no matter how hard you're trying to tell the child now to stop, you're only going to make him repeat it even more, because you said the word with so much emotion. The child has no idea what it means, especially in the first couple of years, but it knows that it's something that is really important to you. So your mindset is the foundation of everything. And your mindset has been impacted by things you experienced already as a child. And especially as women, when it comes to money, we have learned so much about how we interact with money, how we feel about money, and how we are going to deal with our own money. So let's look at a classic journey that a trader is going to have. Be it a trader, be it an investor, when you're ready to take that first step, these are going to be some of the emotions you're going to experience. Where do I start? I mean, you're going to hear whether or not today is a good day to actually start taking a trade. But if you've never before taken a trade, if you've never before bought a stock, I can tell you the first time I ever bought a stock, I didn't realize that the stock market had closed. I didn't realize that my price was completely wrong. I had mismarked a decimal point, and I was saved by the bell that the stock market was closed and that I could correct my error before the market opened the next day. So you start with fear. You start with a feeling of, how do I even know where I'm going to start? Because it is overwhelming. Who am I to even think that I could become a day trader, that I could become an investor? Because I am fill in the blank. I'm a yoga teacher. I am a lawyer. I am a mom. I am just a woman, which is something terrible that we say, because we are women, we are men, we are human beings, we are wonderful beings, but we continuously make ourselves small. So where do I start? Then you look at a chart of the stock market or a cryptocurrency. Take Bitcoin. You look at where Bitcoin has gone and you think back, gosh, if I would have only invested 10,000 francs back in 2019, I would be so wealthy now. So you've got FOMO. I should have invested. And now I'm looking at the chart, I'm over $100,000. I'm not going to invest that much. Who knows if it's going to go any higher? Is now a good time to actually get into the market? I don't know. Which way is this going to go? We read every day in the newspaper that things are going to blow up. The economy is slowing down. So what am I going to do? So we go through either fear, we go through FOMO, then we may go into that trade, and then the market moves against us. One of the things all of you are going to hear repeatedly today is the market is always going to move against you at one point. I don't think the investor has been born. Even Warren Buffett gets it wrong. At times, you are going to see your portfolio go red. You're going to see your trade, your stock that you bought, turn red for a bit. Hopefully only for a short while, but it's going to happen. And in that moment, all our primal fears surrounding money, scarcity, lack, not enough money, or how am I going to pay the bills? I've made the biggest mistake of my life. I should have never gone in and done this trade. I am so stupid. I'm now in panic. I'm feeling completely incapable of getting out of the position I'm in. So how do I get out of this position I'm in? Or the opposite happens. The market is moving phenomenally, and I happen to get in at just the right moment, and I'm feeling on top of the world. I'm feeling absolutely invincible. I am the best. Perhaps this is even your first trade where this happens. So you go into absolute greed mode. Just another dollar, just another few francs, just a little more. I'm going to get there. I'm going to get there. And then if you're lucky, you know when to close out the position before it turns against you. And if you're unlucky, the market is going to end up turning against you, and it's going to be detrimental. I can tell you my war story here. I bought a stock for a couple of 10,000 francs, and it moved up into the high 100,000s. And I was not smart enough to actually close the position or even take out the original investment, because I had this idea that I'm going to get 7 digits and this is going to be phenomenal. And I ended up losing it all. So that is my biggest war story about investing. And I want to just tell you the story to encourage you that it is important to have your own risk management in place, but also to manage your emotions. Because after that happened to me, I was also then stuck in dread as to what have I done? I suck at this. Clearly, I have no risk management. I have no ability of self-control, which is bad. But at the same time, I've learned now this side about myself. So next time that opportunity comes around, I will be smart enough to at least take some of the gains off the table. So no matter where you are in your trading investing journey, or even in your day-to-day life, keep stock of where your emotions are at, because you're going to feel each and every one of these emotions as you move through your trading journey, as you move through your day. And being in touch with your feelings and understanding that all these emotions are completely natural. And what happens so often if you're reading in any kind of a forum online, people will mainly share their success stories. They will make themselves seem like they are invincible, and they will leave you feeling as if you're left behind, stuck somewhere, that everybody else is so much better than you. And I would like you to challenge that and understand that people will like to share when they are successful. They will not always tell you exactly how each and every one of their trades went. And it is absolutely normal to go through each and every one of these emotions on your journey to becoming a great investor and a great trader. And as you're going to hear from both Dunya and Olga, even with their experience levels, they are not past feeling each and every one of these emotions. But understanding that they are feeling this emotion is able to get them out of the cycle they're in. And understand that I'm feeling panicked right now. Okay, so either my size was too big that I got into the trade, or my risk management is not in order, or I was not prepared, or yes, this is exactly what I opened my trade for. This is the maximum I'm willing to lose. And if I lose the maximum, well, this is exactly what I planned for. And the next opportunity will come around. I don't need to be fearful. I don't need to have FOMO. I don't need to be greedy. I just need to go with what the market is showing me today. So I would like to highlight this journey. So how do we move out of this? Here, we see that we've got incredible mindset shifts. Dunya, if you don't mind, we'll move forward one slide. Thank you. Your internal dialogue is so strong. The pictures you make in your head are as real as reality you're experiencing right now. If I tell you, don't think of a pink elephant, you have instantly created the image of a pink elephant in your head. If I tell you to envision a beach, each and every one of you is seeing a beach, hearing a beach, feeling the emotions you connect with going to the beach for yourself. Why? Because your mind cannot differentiate between what is real and what is imagined. And every word you say to yourself about yourself is so real to you that you have a direct impact on your feeling, on how you feel about yourself. You are directly impacting your confidence by how you speak to yourself and about yourself. So when you're speaking to somebody else, we women have the terrible tendency, we self-deprecate. So you'll get a compliment, you'll say, oh no, it's just something old I threw on. Whatever it is, we always push back and we always make ourselves seem smaller. I want you to change how you talk about yourself. And I want you to change how you feel about trading. No matter what happened in the last trade, I want you to change that internal dialogue and really use the knowledge that the words you say to yourself are as real as what you are truly experiencing. Rather than going through the emotions and saying, oh, I'm just such a terrible trader, I have no idea what I'm doing. Go ahead and keep repeating it to yourself over and over again until it is second nature. I have a successful strategy and risk framework that I stick to, and overall, I am a successful trader. You will have trades that don't work the way you expected, no matter how good your setup is. As you're going to hear from both Dunya and Olga, they are professionals and they're still making mistakes. The markets move in ways that we cannot always predict. But the objective is to overall, through the course of time, have so many successful trades. And the more you repeat to yourself that you have this risk framework, and if you're trading within your risk framework, you will be safe. You will make sure that your bills are paid at the end of the month. You make sure that you are still working properly within that risk framework. And that is how your mindset can really help you. Because then a trade being closed through a stop loss or whatever is not the end of the world, but it is perfectly in order because that was your risk framework that you're going for. Second of all, become aware of your emotional set point. We've all learned from the earliest days of our lives to not be so emotional because we were told when we were crying, don't cry now, this is not the time. Don't complain. Don't whatever. It's always about controlling the emotions and pushing them down. But to become a successful trader, you need to understand where you're feeling. If you're coming to the trade, but you are so nervous, you had a terrible day, perhaps you got into a fight, perhaps a project just did not go in your other job the way you wanted it to go. Maybe you had a fight with your partner, your child, whatever. If you bring those emotions to the trade, you're trying to prove something. Your judgment will be clouded and you will not have the neutrality in order to completely and openly analyze a situation. Perhaps you have a strong bias as to what is happening and whether or not this is right or wrong, but that is going to cloud your judgment and give you confirmation bias perhaps as to what is happening. So before you start trading, come into a neutral to slightly positive mindset. And if you're feeling upset, if you're feeling angry, sad, distraught, or even if you're on the absolute hyper verge, that might take away your ability to cleanly make sure that your risk management is in control, and you're more likely to become greedy or say, oh, I don't need a stop loss today because everything is just working so fabulously for me. So become really aware of where you are on your emotional set point and do something before you start trading in order to come back to the neutral position. And most importantly, find out how you feel about money. The way we feel about money is an absolute ingrained, deep set root cause for a lot of people. 90% of all conflicts are about money. And each and every one of you probably grew up around hearing parents arguing about money, fighting about money. Maybe a teacher, a caretaker said, oh, we can't afford that, or rich people are evil, or who do you think you are? Don't be so greedy. All these words have a direct impact about how we feel. Maybe you constantly heard somebody say, maybe your mom, oh, I'm just terrible with money. Or your father said, women can't be trusted with money. I'm saying these blanket statements because I hear them over and over again in my practice when I'm working with my clients. These beliefs are ingrained, and it doesn't matter whether you came from affluent background or a less affluent background. These sentences are repeated and people don't even realize that they're being said. But we learn them as a child and they end up completely influencing all of our interactions with the world. You can find out your own money beliefs by taking a timer and a journal. Sit down where you're not going to be bothered, and for 15 minutes, start writing out everything about how you feel about money. Understand what is coming out. Maybe there are sentences in there like, I'm just no good with money. I can't invest, I can't save, I'm only good at spending, I don't trust myself around money. I'm just no good with money. Whatever comes out, listen to those words and see how you truly feel about money. And then find a way to transform that, either by working with a mindset coach like myself, or by even listening to YouTube affirmations that keep repeating it over and over again. Find something that really works for you and stick with it for at least 21 days, because it takes a minimum of 21 days to rewire the neural connections in your brain. So with these mindset shifts, you're already on a very, very good trajectory towards transforming your mindset and becoming the amazing investor and trader that you are. So Olga, when they have the mindset in order, how do you feel that they should go about doing that trading plan.
Well, thank you so much for all this explanation, Alexandra. I was taking some notes, in particular that I should probably be using some positive affirmations again for 21 days. Oh gosh, sounds like an awful long time, but then on a lifetime, probably it's a very small investment. And I think you mentioned so wonderfully that de facto the risk management and the plan is kind of the framework that puts your mind at ease, which I think is probably easier said than done, because who of us has not moved the stop loss? Who of us has not clung to a trade? At least I have multiple times figured, yeah, but it's still gonna turn. I know it's gonna turn, and then nothing happens. And instead of, you know, losing a modest amount, actually you lost a lot more. And de facto, this can be all avoided if you have a realistic trading plan. So on the next slide, we're just gonna see basically the components of the trading plan is not just the amounts, right? It's framing your mindset, setting yourself adequate goals, and also maybe thinking about why do you want to trade in the first place. For me, a lot of it unlocked when I kind of said, you know what, I'm going to try to trade every day a rather modest amount. And if I then add it all up and say, you know what, 80%, 70 to 80% of the days I'm actually successful, it actually still will make a really good chunk of money. And that reduced a lot of the day-to-day stress for me, I have to say. So being very clear why you want to trade and what you hope to achieve, and then breaking it down into weekly, potentially daily or monthly targets can be a very healthy practice. That helps you to keep greed at ease, because when greed sets in, as Alexandra so nicely pointed it out, then you potentially want to make it all in one big trade, but this is not about it, right? It's about being profitable over a longer period. And yes, you will not make a fantastic trade every day. You also will not make a shitty trade every day. It's the balance of the two that counts. So putting some neutrality into this helps. So writing down your goals and thinking this through and say, okay, what's the size of my trading account? What is it that I actually realistically want to achieve? And then breaking this down as achievable targets will put a lot of peace around your mindset. Same goes for the time. How much time do you want to spend with this? I got, when I started trading, so hooked on day trading that I was actually doing nothing else. I actually actively had to take an 18 months break, or almost a 2 years break, unplug all of my stuff, unplug all of my gear, because it started to consume me, literally. So setting yourself certain times when you trade, of course, certain amount. What is the amount you are planning to invest? What size of a trading account do you want to have, which then will determine your risk levels? Which markets do you want to trade? And also what method? Right? All of this constitutes almost like your trading strategy or your trading plan as a building block. So it takes a little bit of soul searching to do this right. And maybe your plan over time will change, because with more experience, you also start to add other markets or other instruments, right? And that's perfectly right. The plan should grow with you. But at least answering at the beginning kind of these building blocks for yourself and putting it on paper, I'm a big friend of writing, will help you to be more successful, because then you can, to a certain level, stick to your strategy. And we can go to the next chart, Dunja. Will be great. So what are kind of the starting amounts on this all? Well, I personally am a big fan of potentially having multiple trading pots, also potentially having multiple trading pots for different markets or different instruments. And you really should have no shame starting out small. I had to learn this the hard way. Yeah. Because of all the stories. Alexandra, you mentioned it so nicely. You always see these people making thousands with trading. So I wanted that too. Being a greedy person, of course, I wanted that too. And it didn't go well for me. And it's actually this year where I by choice, went through an exercise of practice trading with micro lots, with very modest accounts, with very modest stop losses. And actually one of them is one of my most successful accounts. And I didn't even share at the beginning because my trader colleagues were asking. They say, yeah, and how is it all going for you, Olga? And of course, I would never admit until one day I go like, what is all this buzz about? Honestly said, it's going great with micro lots. And this unlocked so much for me that I actually could voice it out and feel no shame, because I'm like, you know what? I'm very happy with the 150 I make with my micro lots every day. Because once I learned this and I managed to keep my mindset in check, it will be no problem for me to go and scale again. Yeah, and then we will see who is talking. So don't be afraid to start with small amounts. It's actually a beautiful practice. How much should this be? Between 5 to 10 of your investment capital, or 2 to 5% of your total assets. And yes, keep a healthy reserve on your trading account so that, you know, it doesn't vanish and evaporate into space and financial markets, right? There are thousands of market indicators and instruments that you could use. I personally recommend for the start to focus on one market, be it the S&P 500, be it gold, be it crude oil, be it whatever takes you fancy. It should be something that actually also interests you, because you have to read some news. So for example, I'm a big fan of the S&P 500. I'm not a fan of crude oil, and I never traded crude oil. And so many people suggested it to me, and I'm like, sorry, can't do it. Right? So having a market that actually interests you also will help you to stay positive. Indicators, you could study videos day in and day out. The fundamentals, I personally believe, is trend analysis, support and resistance level, moving averages. You could use, for example, Fibonacci, or Dunya, right? You use another indicator set, maybe you want to share.
Yeah, absolutely. And I will show it in the platform later as well, like more the traditional ones, the moving averages, and RSI, sometimes also an Ichimoku cloud. But yeah, not
How many
overdoing it as well.
indicators do you use?
Max 3. Max.
Max
I used
3.
to have much more, but it's overcrowding the chart.
I personally use volume price analysis, very simplistic. Lots of volume accumulating fast will mean that the markets moves in one or the other direction. That is what my brain can handle. I love it. It's the oldest form of analysis in trading, was already used, I think, 1920. Something like this, when they were still running with the paper from one place to the other, so the markets were moving a lot slower at that point in time, and I absolutely love it. And then on the instruments, really, when you're starting out, my personal recommendation is to use very moderate or no leverage. You always can add leverage to it later on. Right? And that's maybe the thing. I mean, maybe Alexandra will say, Olga, you are a woman, you're always so cautious, so we should be thinking big. But I personally made the experience, you can think big, but that doesn't mean that you actually don't put in the work to also try things out on smaller amounts. It's perfectly fine. You can always scale. Yeah. So that would be kind of the building blocks here, and we can move on. I am so sorry for this. Terrible. Human speaker, at least. It's no avatar. There you go. At least you know that. So then you would document this into your trading plan, your profit targets, as said, hopefully broken down to manageable units, your loss limit, right? For example, on day trading, 0.5% per trade per day of the invested capital. You put together your strategy, which indicators, which markets you want to use, and then establish a routine, which we're going to show you just in a minute on kind of these discussions around the first trade. And really write the trading plan down. I write my entry and exit levels down every day, simply because it helps me to center my mind. It's not even that I wouldn't know these levels, but by writing it down and putting it on paper and having it on my desk when trading helps me to stay focused, helps me to stay within a framework, and helps me to be more relaxed and to resist being a greedy person and moving my stop losses. So big fan of writing. Cool, we can move on. Yeah, and the risk management aspects, I think we already touched upon. I personally, besides the amount, think that Alexandra, your tips are the most important ones. Because when your mindset is not in a good place, it's very hard to be successful in trading, or at least to be rational. You still might land one or the other lucky punch. Yes, it can happen, but the chances that you will not are, I think, rather high. So centering your mindset is as much part of your risk management strategy as it is to stick to your stop loss targets. And there also might be days like now, and we're going to talk about this when we speak about the charts, where it's also perfectly okay not to trade. Actually, sometimes it may be more beneficial not to trade than to trade, because you can avoid losses, and there are periods where just there is so much volatility in the market that you would feel like a little boat in the rough sea, and the moment you start to trade you go like, oh my god, how did I get in this place, right? It has happened to the best of us, honestly, and I would not consider myself being in any form or shape a great trader. I just love trading, I have to say. So it happens to the best of us, and sometimes not trading, you will feel very happy the next day. So write down your trading plan, define and document your entries and exits, assess your risk. So if there is a lot of volatility, smaller position. If there is a great opportunity, also have the courage to go with a bigger position. Don't continue trading after a win or loss, or if you can't resist, do it with half of the position. Okay, and maintain a strong mindset, which will happen by default if you have a strong framework in place that you feel comfortable with. And with that in mind, actually not much can go wrong, because over time you will be profitable. So maybe let's hear a practical story from Dunya about your trading plan, Dunya.
Absolutely. Okay, on my trading plan, I started placing my first trades approximately 14 years ago, if I'm correct. Yes, absolutely. So when I started my trading journey, yeah, frankly speaking, I made every single mistake I think that we heard about and that probably the audience has made as well. Trading on FOMO, like fear of missing out, being full margin, having no risk management, being driven by fear and greed as well. Um, Touching trades which had a wonderful setup and then becoming emotional. So with time, I learned that a trading plan is very important to keep my discipline in check, because in the end, it's having the right mindset and being disciplined about it, right? So I really had to get in check my emotions. So I started to define some key rules to myself, and I'm going to highlight a couple of examples that are part of my trading behavior, of my rule set. Doesn't mean that this fits to each and one of you. It's not a one size fits all, but do get your plan according to your behavior. So in my case, exactly how also Olga was saying, focus on one asset class. I used to be in every single market, but I couldn't master every single market. I focused on one in the end, US indices. It interests me. I like indices. So let's focus on it. I started to set up a more proper risk management. Part of it was that I told myself not more than 20 to 30% of my account value goes as margin for open positions, to just also leave some leeway to not come into those fearful moments of, oh my God, will I be margin called? What's going to happen? Oh, it's going against me. I will talk about that later as well a bit more. Having for every single trade a stop loss and a take profit, whether it's set in the trade already predefined or at least writing it down and actively monitoring my trade. Of course, follow through of my setup, not being guided by emotions, not adjusting my stop loss, not taking it out, not adjusting anything on my trades, unless like a huge news breaker comes in. And the last one is really emotionally driven. Whenever I started to have the first couple of trades which went into the loss area, I would start to fish in other markets that I had no expertise, just to say, oh, this market looks great, let's play something. No, that most of the time went wrong. Now I just stop, and there's every day new opportunities. So again, having my disciplines. And these are a bit my rule sets. What are yours, Olga?
Yeah, similar rule sets. Plus, as mentioned, I really have kind of target amounts that are usually dependent on the account size that I trade, and that helps me also to manage greed. And of course, there might be days where there just are fantastic opportunities, and that's perfectly fine. But there also are days where there are no opportunities. So I try to not trade when there are absolutely no opportunities. I think this was a big breakthrough for me to kind of learn that and be able to really stick to this. And what really helped me as well is not to overtrade. So you make a good trade, you take your profit, be happy with it. Call it a day, do something else, because it's about long-term profitability. But I had to learn this. I really had to learn it, I have to say. And I still display behavior which is totally unhelpful, in the sense of you make a loss trade and you want to make up for it, not in different markets, but maybe increase position size, right? Because you say, okay, I missed that one, now it's going to go better. I started to take notes whenever I did this, because I'm an analytical person. In 80% of the cases, it actually leads to more loss. So once I had this data on paper, now I'm better at managing this. So that also is very helpful. And probably the third thing that I do is to revisit my trades, both the trade, the entry point, the exit point, and I do write this down. And even if I don't look at this ever again, is more the act of writing helps me to center my mind, to realize what have I really done? Why have I done this? And do I want to repeat this behavior or not? And so with that, yeah, the plan is every day more successful, but it takes work. Cool. Let's push on.
Let's push on. But there's actually a question which came in on this, asking whether starting with a small account and only making very small gains and losses of 10 to 20 francs, will this still help discipline, or do I lose motivation with time?
This I don't know. I never traded with such small amounts, I have to say, because I trade futures or micro futures. So yes, you don't get to 10 franc amounts. I mean, you can, but then you would need to trade one micro lot with one stop loss. And that I never did. The smallest position I ever did was 3 micro lots, because I had to dig myself out of an emotional, how would I say, state, in order to kind of start to trust my trading capability again. So I can't answer. I don't know. How about you, Dunya?
I think it would be a bit too small for me as well to say it's worth the effort and time. On the other side, I think you can start with any amount on a trading account. It can be 1,000, it can be 10,000, it can be 100,000. I think the more like the focus where it should lie is more how much do I put per position, and having then the appropriate, let's say, profit and loss profile according to your balance. Of course, if you only have a 1,000 francs account, you'll probably, with the proper risk management, only make 10 Swiss franc moves. Yeah, to start with maybe, but slowly increasing with time.
Yep. Okay, cool. These all the questions. Let's go. So, speaking of the journey, the most common pitfalls, I think we already touched on. So the most common mistakes, which we have on the next slide, actually are all about not having a plan, Over trading, so really, you try to make gains fast and you overtrade, or you are at it with emotions, ignoring stop loss. We all do it sometimes, but it's definitely not a good practice. Using high leverage too early really can put your account at jeopardy, and lack of practice with the trading tool. I mean, it can happen. I always have like also a technical checklist, not a technical analysis, but really to check whether my indicators are correct, whether my stop loss is correctly set, whether I'm in the right account, etc. So that I am sure. It's almost like making a quick check before you start, because it has happened to me multiple times where actually my trading tool kind of took out the stop loss automatically, and then you're in the trade and there is no stop loss. And so actually checking that the setup is right, I think, is very important, because ultimately there is a lot of technology involved. And even though IG platform is super reliable, things can happen, things can change. So I think it's good to practice, and you can always also practice in a demo account. Yeah. Cool. And that would bring us to de facto the mental setup. And this is where Alexandra would speak, but where do we
I'm
have
here.
her?
Can you hear me?
Yes, we
For
can hear
some
you.
reason,
Very
my
good.
webcam decided to die. I hope it'll come back. But as long as you hear me, we're good to go. So
Very
the
good. Go
most
for it.
important, the most important place to start is, how am I feeling right now? So become truly, truly aware of how your feelings are doing. How am I feeling? How do I believe about this trade? Do I feel like this is going to be a success? Or am I feeling absolute dread? Now, yes, of course, at some point you're going to have to take the leap and start trading or investing your actual money. But if you're feeling absolutely insecure, start in a demo account. Start in an account with artificial money that gives you the feeling that you can access all the markets and see how you react to how the markets are working. And then visualize yourself. So I also work with athletes and CEOs and doctors. And what we practice all the time is visualization. And I'm sure you've heard this from athletes. The reason, or part of the reason, why records keep being broken is because they're seeing other athletes achieve these records and they say, I can do that as well. If you put, and they've done these tests countless times with athletes, they put them in an MRI and they scan their brains and they let the athlete go down for example, the ski race that they're going to be doing, or the swim meet, and the muscles, the corresponding parts of their brain to the muscles activate and light up as they are going through the motions of running and doing that race. So what works for the athletes, it's the same brain, it works just as much for yourself. So visualize yourself over and over again, because remember, there is no difference between what is real and what is imagined for your brain. Visualize yourself over and over again, going into the trade with the right mindset, with the right setup, with the right framework, putting your take profit, setting your stop loss, and not moving it, no matter how big the urge is. If the market moves against you and it takes out your stop loss, tough luck. If the market rears up after, you can always take the next trade again. The next trade is going to come. So allow yourself to truly trade within where you feel comfortable, no matter where that is, until you really have it set. And the more often you practice, the more often you visualize yourself doing it, like an athlete, you will feel so comfortable that when you end up taking the real step, it will feel so natural that you will be completely in tune with yourself. Next, please, please, please turn off all distractions. I actually had a session with a trader on Monday, and he was telling me, oh yeah, I take a trade on the way to the swimming pool. And when I'm sitting in the car at a traffic light, which, I mean, we won't tell the police, but yes, okay, fine. He's got 25 plus years of experience. He's stared at charts for thousands of hours, but even he was saying that he gets it wrong occasionally, and the market moves against him. Now, if you are starting out or you are not a professional trader with 25 plus years experience, please don't do something next to it. Don't listen to a podcast. Don't be cooking. Don't have to run away the next moment because somebody's coming, a visitor, or you're going to be in another meeting and you're, oh, I'm just going to set this trade and then I'm going to walk away. Don't do that. even if you have the perfect risk framework, your mind space, especially at the beginning, is not going to be so relaxed that you can just completely set it and forget it. So take the time to really be focused, because trading, it's a job and you want to take it serious. It's your money. You have worked for it and you have a why you're doing it. Maybe your why is because you would like to make some extra money for your family. Maybe you're going to trade up and invest up for a vacation. Maybe you're wanting to set aside money for your retirement account. Whatever it is, you have a why. And it is up to you to respect also the money that you are investing. That yes, it feels like a game at times, and it is gamified, but it's still something that deserves your full attention and your true dedication. And as Olga mentioned before, know your why. Why am I doing this? Why am I ready to start on this journey? Why am I interested? Why is this calling to me? And stick to that why. And 100 francs a day, if you trade 20 days a month successfully, that is still 2,000 francs. So even small amounts add up to something beautiful at the end of the month, and be proud of those steps. And ultimately, take the trade. You can FOMO after any chart. You can go back and say, oh, what if? But the best day to start is today. Once you feel ready, and if it's starting in a demo account to get your toes wet and to get a feeling for it, go for it. Start experimenting, get your toes wet, get interested, get excited. I mean, look at the excitement in all three of us in different areas of the market, but we all enjoy the financial markets. We all enjoy what we are able to express and see. So come join us in the fun of the market.
I actually have to add that I have printouts of some of my best trades to frame my mindset to the effect of visualization. And I actually have them like little posters for trading. Sometimes I look at them just as you said, like the athlete. I know I could achieve this, so it can be done again, right? It has already happened once. It will happen again. And I actually love it. It helps a great deal. So sometimes when a trade really goes well, and it wasn't by luck, it was by analysis, I take a screenshot and then I use this to kind of pamper myself up. Yeah. Cool. So mistakes happen and we all make them. And really, I think Dunya shared before, right? And you're going to share some more of your mistakes. But honestly, they happen to me every day. And before this webinar, we were exchanging with Alexandra and with Dunya. I have one trading account that really has a little bit of a difficult story. It had a difficult story all the way through. It's an account that never turns fully profitable, but also never completely disappears. And I already was very proud last week in the preparation saying, this account actually finally made it out of the weeds and it's really good. And then it had a really difficult week this week. So it just happens to all of us. And all the emotions that you, Alexandra, were mentioning at the beginning, I experienced sometimes all of them in one single day. And still keep trading and still manage to make money on the back of it and still enjoy it every day. Not since 25 years, but since a couple of years already. So I only can invite all of you to approach this with an open heart, open mind, give it a go, but also with some analytics. And then it really is one of the biggest adventures we all can have. Dunya, anything to add?
I knew it. Well, I mean, mistakes. I mentioned before, I've done pretty much every mistake possible I could at least think of, and I still do mistakes with the trading plan. It helps me a bit. But I think one mistake that I want to share, and I think the audience has probably been in this situation a couple of times as well, maybe you too as well, is basically being stuck in a long short position. So again, we're talking here in my case about CFDs, leveraged trades. You can go long and short, and you can also have so-called hedged positions, so on both sides, being placed in both directions. So I would start, for example, with a long trade. I have everything thought through. The market turns against me. I'm like, oh my God, it's getting into a loss. I don't want to close it because I believe in myself and into my setup. I start to put a short in there. Then the market starts actually turning towards the long, and I'm waiting. So in the end, basically, what I thought that maybe it dips, it hits my short and goes up, and then I have also a double profit on the long side, was complete wishful thinking pretty much every single time when I found myself in such a situation. So yes, I would get into this emotional spiral, being stuck on both sides, because now it's not about the market going up or down. You're just stuck in this situation. So you're nervous. It's not fun. And again, I think a lot in the audience can actually relate to this moment. I am not saying that the long short position by fact is bad. No, it just needs to serve the right context and purpose. And in my case, I'm still falling into this all the time, and it's pure emotion on my side. It's fear of missing out. Yeah.
Yeah, on my end, I think one of my most common mistakes actually is either entering the trade too late because I was over analyzing everything and then it's too late and then it's not a favorable setup, or being greedy and entering when there are these movements in the market where it just actually doesn't move anywhere and it goes sideways and sideways. And you kind of think the movement eventually might come, but nothing moves. And instead of waiting for a really clean setup, kind of hopping in it because I want to trade, and then you are stuck in this, right? And it becomes terrible, right? I absolutely hate those situations, because then you can neither get in or out, you make no proper profit, eventually you make a loss, because of course just in these moments the market corrects more in the direction where you didn't place the trade, and it just feels terrible. So I'm trying actively really to challenge myself to avoid such situations. And if I decide to make a trade based on my analysis, put the trade there and go for it instead of then analyzing again and being too late. And if it just goes sideways, yeah, bloody hell, then there is nothing to be traded. It's okay. Then I'm like telling myself, Olga, do something else. This is not for you. It's not always successful, but more and more successful. Okay, let's come on the aspect of your first trade. So we put together for you a quick checklist, which due to the rather advanced timing, I think I will go through a little bit on the quicker side. And then Dunya, you will start demonstrating the IG platform, because I think that that is far more valuable for people. So the way I set myself up is I always check the big picture on any given index or market or whatever I am trading. Always check the news every day, and I personally do not trade during news, other than when it is a really interesting economic announcement. Then definitely don't trade the news announcement. But for example, today is the interest rate decision by the Fed, and it turns out to be always very interesting to observe what happens when Mr. Powell speaks, because he tends to have a very positive impact on the market. So other than that, check for the news, update or conduct my analysis, set the targets, write them down, set the exit points, think about this, and then de facto decide what will be the size of my position depending on the account as well as on the overall sentiment of the market. And from there, yeah, look whether it all happens and go for it, right? As Alexandra said, at one point you have to push the button. There is, yeah, nothing around it. And then really hope that the trade works out as planned and manage it. So Dunya, do you want to hop into the IG platform to show a couple of pointers and things for people?
Absolutely. Thank you so much. And I will show you on the platform, which should be displayed by now. Also according based on your checklist, a couple of features. I know some in the audience know our platform by heart. That's why I will not go super extensively in it, but for the new joiners, a quick walkthrough. As Olga said, we are awaiting quite a big news. You see here an economic calendar at 8 p.m. Swissy time. So ahead of that, Olga would probably not place a trade yet, but monitor and then take her action. So in the checklist itself, as she was saying, so big picture, we're looking at charts, but we're also starting with news. So first of all, on the very left side of the IG platform, you will be seeing, of course, all the different underlyings you can trade with us as a CFD. You can create watch lists, you can see your position orders, and at the bottom here we have different also external tools such as news. We have a lot of signals. We have tip ranks for you, which comes with Stock Screener. Basically, that's more on the equity side where you can set filters and search for specific equity lists that you want to have, for example, with a dividend yield higher than 5% and so on. And also the economic calendar, which is very important. Again, here, filter by importance, by country, what exactly you want to focus on. Is it earnings season? Okay, I'm going to check what are the big earning announcements of maybe the big US companies that you're monitoring. We are also having, of course, the launch pads here on the top where you can tailor make all the different screens that you want to see. And I have prepared on my side a very small one for you. So in my launch pad, you will have the economic calendar here on the side. You'll be seeing popular markets at the bottom because it's always good to know what the world market in general does. So it includes the major indices, some of the major FX pairs, and a bit of spot gold and oil. And now coming to the analysis itself. So once we've actually checked news, the economic calendar, what's going to happen, if we open a chart, and because Olga was mentioning before the S&P 500, it's called US 500 with us, we have the chart, we give you different tools. You start with a big picture. So you can say every single candle here should reflect a full month of the price range that it was trading in. We can then see, okay, overall a longer term trend here since 2023. We can then go into a more granular view, for example, daily candles, going down to 1 hour. Okay, the chart already is very different dynamic, shorter time period. For example, down to 15 minutes. A lot of our clients actually have a preference to be in a 15-minute chart or also in a 5-minute chart and then starting to do their technical analysis. Technical analysis, you have here on the top left a toolbar where you can input different indicators, RSI, moving average, click it on, take it out again, start to set up whatever you actually prefer on your side. And when you're actually about to place a trade, which we will not do right now specifically, but more for illustrative purposes, you have the deal ticket here on the right side. You can buy or sell, because again, we're talking about CFDs here. You have the optionality of both sides, betting whether a market goes up or down. Let's say we want the market or we are betting on the market to go up, being long. You have your size. You can set your stop as well as limit for maybe some people. It's also our so-called take profit. And because we are here talking again about CFDs, it's a leveraged derivative. We are monitoring or mimicking the price of an S&P 500 here, but we're giving you the opportunity to actually trade one contract, which is worth 6,000 in this specific example, but you only have to place 28 Swiss franc as a margin of your account. So normally you would actually be deducted 6,000 in order to enter a trade. Here we're blocking a margin. So you have all the details here and also here on the top. I'm not going to go much more extensively in it. These are some quick features for you to guide yourself through. Please open a demo with us, click through, trade with some, let's say, virtual money. Try your mistakes. It's not the same like trading live at all. Most of the people are very successful on demo, and then they hit their first trade on a live account and it goes into minus because, again, we have all these emotions which come into place. It's about real money. So in this case, what means long-term success on a live account? Getting maybe back here, and I'm handing over back to you ladies on this one. What can we do here?
Absolutely. And maybe it's also important to note, why wouldn't I place a trade just now? It's too short to the Fed announcement, even though the Fed announcement might be already priced in, but still usually volatility is rather high. The other thing is I trade futures, so there is contract change on Friday, which anyway makes analytics always a little bit more difficult because it changes from one contract to the next. So the indicators are not as clean, or you need to watch both contracts. And thirdly, there is in general just a lot of volatility and uncertainty in the market caused by the conflict in the Middle East, also caused, of course, by quite some tweets of Mr. Trump around tariffs, and everybody feels Liberation Day 2.0 coming closer. And I think this all sits in our brains, how big the volatility was there. So today, just shortly before the Fed announcement, I would not place a trade, whereas at 8 o'clock, now trading the US markets, observing what happens, and then taking a leap of faith and opportunity. If the setup is good, of course, by all means, right? Also today, the market was rather slow, I have to say. There was one or two good opportunities. So long-term success, what does it really mean? Well, on the next slide, you see it very clearly. Trading is really about long-term success. It's not about winning every trade. It's about being profitable in the long run. And that is just so important to keep reminding yourself of, because it again helps to balance emotions, right? And I think there also is a couple of mindset pointers that Alexandra has for us on long-term success.
Absolutely. So most importantly, understand that whenever we learn something, it takes time. I feel that as adults, we have forgotten that when we started to learn how to walk or to speak, we made so many mistakes. We kept tripping over and falling down. We picked ourselves up. And I don't see a single adult out here that doesn't walk today because they sat down as a baby and said, nope, it didn't work the first time. I'm going to stay here. I'm never going to walk. This is just not for me. So take the same playful attitude, be it trading, be it public speaking, be it whatever it is that you're doing in your life, take the same playfulness and add it to your life. Everything is a journey, and give yourself the grace, the time, and the understanding that while you are learning, you are on a journey, and it is okay to make mistakes as you're learning, and that you're always learning about a new side of yourself. And as you dive into working with money, trading, investing, you're going to learn an entirely new side to yourself that did not come out in the same way before. So give yourself the time and the space to learn. For your mindset, repeat it, repeat it, repeat it. As I say, I work with, including Ramon Senhuisen, the Swiss ski star, and we are repeating exactly how he goes down the hill, how he takes each and every single curve. It is not because he doesn't know how to ski. It's not because he doesn't have the best equipment, but it's so when he is actually taking the race, and in that race, he knows exactly how he takes each and every curve as he goes down that hill, so that it is second nature, it is completely automatic, and you're not wasting time. I love to give the example, when you put on your socks, well, right now it's warm, so you might not be wearing socks, but when you put on your socks in the morning, you don't actually think about how you have to move your foot and your hands in order to get the sock over your foot. When you watch a small child, however, it is to the detriment of the parents because you're completely losing your mind because it takes forever, and they put it on and then they take it off and they put it on the wrong way, but they are learning. And it goes into the subconscious mind so that it becomes absolutely second nature. And the same thing with trading. The more you repeat your mindset as to, I am successful. I know exactly what I'm doing. I know my risk framework. I know exactly that some of these trades, yes, they're not going to work out, but all over my trading journey, I am going to be successful. And I'm sticking to my plan. I am sticking to what I have learned, what I am perfecting, because you're always going to find another video on YouTube, on Instagram, on TikTok to say, this is the bright, new, amazing trade, and with this, I'm making $1 million. If it's not your setup, if it's not what you've learned, what you have worked with, what you have perfected, it's easy to get distracted by these beautiful, shiny new things. But stick to what you have learned. Stick to the markets, the setup that you feel comfortable with and that you are mastering. So that way you are completely wired for success. And because I want you to be wired for success, I've added a QR code on the next slide that you can scan with your phone. It'll take you to my link tree, and on my link tree, you're going to see YouTube channel in English. Select the YouTube channel in English and scroll down. There's a video called I Am Abundant. And I uploaded this video, and I would like you to listen to this video for 21 days, every single day. It is completely free. There's nothing attached. You don't have to do anything. It is a guided meditation, a guided mindfulness exercise to bring you back into feeling confident, into feeling good about money, good about yourself, good about life. It is so easy to fall out of this feeling of goodness, especially when we open the news, we see whatever is going on around us. And I want you to be able to reframe your own beliefs around money. So listen to the audio for 21 days, at least. It's going to completely transform how you feel, how you approach money. And that is my gift to you, to really set you up for success in whatever you decide to take from this talk today. And with that, Dunya, do we have any more questions?
There is one which came in, and I would say I'm redirecting this to Olga first. What is your good rule of thumb for setting stops and limits? Very often asked question, very hard to answer, I guess.
I think it's very hard to answer because it depends to a certain extent also on market conditions. Sometimes with high volatility, a trade just needs more air. Otherwise, you get stopped out for no reason and it's very cumbersome. So I only can say it in pips. I have a stop loss by standard of 16 pips on. So I don't know what that would be in your terms, Dunya, but it's actually not a lot. I mean, it's not a huge thing. I mean, you could set the stop loss at something like maybe 1%, 2%, 5%, depending on the size of your position, right? For me, because I trade in a tick chart, I really set it on the amount of pips, and somewhere between 10 to 16 proved to be quite a good thing. What it has done to me, though, is to be more precise with my entry points. The more precise the entry point is, the more narrow the stop loss can be, because naturally you might not need such a big leeway. I mean, but you also could have, set your stop loss based on how much profit you intending to take. So if you, for example, I don't know, want to trade, you say my target is to make 10 pips, and then you don't want to risk more, then you can say, look, I'm going to set the stop loss maybe at 20, right? So to me, it really very much, I vary this by condition, account size, and market condition, I have to say. That said, for me, the bigger thing than the stop loss is actually the position size. Nothing helps you to have a small stop loss if you go in full fire over the margin of your account, for example, right? So I much rather like to work through the position size, and then, for example, lower the position size in terms of high volatility in order to be able to stomach a larger stop loss. That is where, for example, the micro lots prove to be super helpful. Then there is more air to breathe. I don't know if I answered this conclusively. Maybe not as good as I could, but
No, I think it's a very fair point, and it also depends a lot. Are you a day trader? Are you a scalper? Are you a swing trader? You need to look at the chart, look at also the previous candles, what was like the low or the high, depending on the direction. So I don't think it's like really a rule of thumb saying it's at 10%, 5%. It really depends on volatility. It depends on the candle time frame that you're looking at. The 1 minute candle will not show you the same as the daily one, the chart horizon that you're looking at, and also the horizon of your trade. So I think it's more having with indicators, maybe in the past candles that you can in the history analyze, finding more like those resistance points in order to get guidance. But yes, very hard to answer, and maybe just because just being conscious of time, maybe one question that I'm picking out for Alexandra, since you mentioned that you trade but especially invested yourself, have you trained your mindset and became a better investor through that?
Yes. So on the investing side, my time horizon is the money that I'm investing is going to stay invested until, well, hopefully I can just keep it there until I'm retired, and then take it out at that point if I and when I need it to live. But my investing time horizon is truly to build up wealth for the long term. I don't have the time. I mean, can you imagine if I'm working with a client and in the back of my mind I'm going, oh, I wonder how this trade is working out right now? That would not be very good for my clients or my work. So that's why I'm not doing the day trading. However, for the investing side, definitely. I understand now in April when the markets Liberation Day crashed, I stayed calm, even though I noticed a large shift, obviously, in my long-term investments. But I stayed calm and I said, well, I'm in there for 30, 40 years, so I don't have to worry about the brief movements. I have enough reserves so that if the market comes down far enough to where I want to buy more, I can buy more. And for the rest, I have a constant reinvestment strategy anyway that I buy every month. And with that, I keep buying regardless. So that takes, for me, it takes the market fluctuation and the thinking out of it, because that's the setup that works for me personally around my professional setup.
Thank you so much. So I think we're coming to an end. I on purpose have put this slide on again because also someone in the audience asked again to get the QR code. I hope everyone had now actually the chance to scan it. Otherwise, do ask and we can share it again. So in terms of timing, and I think a lot of you guys would love to catch some sunlight as well, including our speakers. I would like to thank Olga and Alexandra for this great presentation, for all those inputs. I hope you all found it as inspiring as I did. Also, thank you very much to the audience for being here with us today. We hope that we see you again soon. And for now, we all wish you a wonderful evening ahead. And until next time, goodbye.
Thank you. Bye.
Bye bye. Happy trading.